November's inflation data has increased to 2.3%, giving Australians an idea of how the economy is faring. Joining me live is HSBC Chief Economist Paul Bloxham. Hi there, Paul. Thanks for joining us. So what do you make of the numbers? The Treasurer says that we're making progress. We might not be feeling it. And the opposition says that the government is hiding inflation.
I think we are making progress for inflation getting back towards the RBA's target. But that number you referred to, the headline rate of inflation, is not the main thing that the RBA is really watching. What they're watching in these numbers is something called the trim mean, which is the underlying measure of inflation. And it came down a little bit as well, but it's still running at 3.2%. Now, 3.2% is good in the sense that it's coming down from where it was and inflation's coming towards the RBA's target. But remember, they target 2 to 3%. They target 2.5% inflation. So we're still clearly above the RBA's target. It's coming down quite slowly. And so it is good news that inflation's gradually moving towards the RBA's target, but we're not there yet on the measure that really matters for the RBA. So I think that's the thing that we need to keep in mind.
So obviously no February rate cut.
Well, it's not obvious that that's going to be the case, but that's certainly our working central case at the moment. We think that inflation is coming down a bit too slowly. It's only gradually moving towards their target. It's still above the RBA's target band. And then we got to keep in mind that there are other things going on in the economy. And in fact, today we got some numbers on job vacancies, which showed that job vacancies have started to rise for the first time in over 2 years. So not only is inflation coming down quite gradually and still above the RBA's target, but of course the labour market, the jobs market, is actually starting to tighten up a bit. The jobs market is strong and has momentum. So that might be another factor that the RBA would want to consider in terms of whether they would think about cutting their rate in February. If they look at the fact that inflation's coming down still slowly, it's still a bit too high, and the jobs market's actually starting to tighten rather than loosen, this we think will add together to it more likely that it might take a bit longer before the RBA is delivering rate cuts later this year.
So what's the trajectory for inflation for the next few quarters, all things remaining the same? And I guess keeping in mind we've got those wildcards such as what happens with trade in the US and also how that affects the global economy, especially China.
Well, the key driver of the domestic story is going to be domestic inflation. It's going to be about domestic services, and it's going to be that how the labour market travels and what that means for wages growth. And we think that domestically, at least, inflation is going to gradually head towards the RBA's target band. And we think by around the middle of this year, the RBA will probably be convinced that they can start to possibly lower their policy rate. But as you said, there's a lot of uncertainties out there, and a lot of them this year will come from what happens in the global picture. If we were to see some sharp changes in US policy and then responses from China in terms of their policy changes, that could mean a lot in terms of what it means for the overall economy. But of course, it could have an implication also for what happens for inflation and then what the RBA feels comfortable with in terms of doing with their interest rate setting.
Great stuff. Thank you so much for your insights. Paul Bloxham, HSBC Chief Economist.